In this video, let's go over the proper application of a 2-bar trailing stop. So one of the most common mistakes that I see a lot of beginning traders and intermediate traders make is they try to trail their stops way too tight and they choke the trade to death, and then they end up getting stopped out, and then the move continues on without them. So what we're going to do is we're going to pretend that we were in this trade. All right. So we're going to say we're short up in this range here at 83.81. Okay. So now I'm going to use the ink to showcase the trade so you can kind of follow along. So this will be our entry bar. All right. So our stop would be, obviously, you're going to make it the high of that day. Now, in realistic terms, you probably shouldn't use the high of that day. You should use something higher than that. Now, this would be bar 1 day past your entry. This would be 2 days past your entry. So now this is bar 0. So now what you do, you move your stop from point 1 to point 2, and then that's your 2-bar trailing stop. So now let's work through this. Now, if we go, this is bar 0, then you go back 1, 2, that's your stop. Now let's pretend you're already all the way down to this situation. This is bar 0, current. Let's just call it bar C from now. This is the current price action. You go back 1 bar and then 2 bars. So you're going to use the higher of the 2. So now that's that one. This is the current price action. You're going to go back 1 bar, 2 bar. That's your stop. Current bar, 1, 2. Now that's your stop. Current bar, 1, 2. This is your stop. Current bar, and this is your stop right here. And you can see you never really got stopped out of that move. And I'm going to use the horizontal line to bump it down here so that you can see that really close there on that one. And then you can see as you go down, you just keep trailing it on a 2-bar trailing stop. All right. And that's how you use it. So let's keep on walking through this example. So now if we say this is the current bar where my mouse is, then you'd go 1, 2. We bump it down there. This would be current. 1, 2. Bump it down, and you can use any number you like. I just like a 2-bar trailing stop. You could use a 3-bar trailing stop. You could use a 5-bar trailing stop. Then current bar, 1, 2. Current bar, 1, 2. All right, there's the current. And then you're going to go all the way back here. Current bar, 1, 2. And at that point, you would be stopped out because this would be their current bar. And you go back 1, 2. There's the high. And then this is current, 1, 2. That's the high. This is current price action. Boom, you get stopped out at 82.057. So remember, when you're trading, always use the stop loss. You can always use an open target so that you can have unlimited gains potentially, right? And then you want to limit your risk to either the upside or the downside, depending on what side of the market you're in. Good luck. Hope it helps. I'll see you in the next video.